Hello traders, Gary Wagner for Trending Markets. It's approximately 10 o'clock in Honolulu, 4 o'clock in New York. Equities markets have just closed for the day on Monday, April 11, 2016. As you can see, Dow Jones Industrial Average, which was trading really a lot higher than it is right now, let's call it 17,560, had traded to a high of 17,731. So you can see we're over 130 points off of the high, trading about 20 points lower on the day. Now, we do have crude oil trading higher today, almost 2% in terms of gain. More importantly, trading above $40 per barrel. And then lastly, Standard & Poor's 500, S&P 500, we're looking at the E-mini. It does appear as though it will settle off on the day, off by about 6.25 points at 2034 on the day. So traders, obviously, a couple of interesting factors. The Standard & Poor's 500, this of course being a chart of the E-mini, a daily chart, was trading substantially higher on the day, 2056.50. That was the high that it traded to today. You can see that on this daily candle, but you can also see that the daily candle has closed red on the day, signifying that we have a lower close. Now, in terms of the high, you actually got a higher high today and a higher low than the previous day, but the fact that it traded so far off of the high under pressure tells me that that is fairly significant. When we talked on Friday, we talked about the fact that we saw some real resistance in the market at 2072, roughly in that area, and that was that intraday high. Now also, if you match that intraday high up to this most recent high, you'll see that they're very, very close together. They're almost identical in terms of the top here and the top here. Now, we're still well above our 200-day moving average, although we are moving closer to that point, and my sense is that we could see the equities markets fall under a little bit more pressure. Now, another interesting thing, as we pointed out on Friday, is the fact that there has been this uncoupling, this negative correlation between U.S. equities and crude oil. And traders, it seems as though that negative correlation is carrying over, spilling over into the market today. Now, crude oil is trading up over 1.5% on the day, and it also is trading over $40 per barrel, 40.36. You can see that on this daily chart. This being crude oil closing up today. And then when we take a look at U.S. equities, again, a daily candlestick chart, we see this market closing lower. And traders, it becomes more apparent when we convert our daily back into a weekly chart. And we can see, as we talked about a little bit last week on Friday's weekend review, how we got definitive bottom activity in the market about what first week of February. We had equities tracking higher, we had crude oil tracking higher, and there was extremely a strong positive correlation between the two. We also noticed that at the end of last week, we had equities down, crude oil up. The week prior to that, we had crude oil down and equities up. And so far for the start of this week, we have crude oil up and equities down. So as I said, we definitely now see this negative correlation between crude oil and U.S. equities. And so traders, lastly, do want to take a look at the dollar. Dollar under pressure today, but only off about 0.25%. To me, the key concern is the fact that it broke through 95 being a 23% retracement. It is a retracement from the move back in July of last year up to these tops at about 100 on the dollar index. We saw it hit that top twice. Third attempt, of course, was a failure, and now we're moving back down. And I believe that we will not see any kind of real support in this market till around 94. And the fact is, we are right at that point now. So whether or not this market can actually hold this particular price point is something that we want to look at, and look at with great detail. We have had the euro dollar moving up reciprocally as the dollar has been moving down. And then also, if we do see more pressure in U.S. equities, we might have a good short play there. So we're going to keep our eyes on that market closely. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.